Hello, my name is Alex Perez, and today I will be talking a bit how the accounting cycle, which we've been talking about for I want to say the past 4 months. We've been learning terms like revenue, expenses, we've been learning about income statements, retained earnings, and it all added up, and now we have to show it all in this problem, which we will just jump right straight into it. This is the problem. The problem I had to do was how Zero and Clara Lucero began operations of their furniture repair shop, which was Lazy Sofa Furniture Incorporated, on January 1st, 2023. The annual reporting period ends December 31st. The trial balance on January 1st, 2024 follows, which was this was the trial balance shown below, and in the bottom it says transactions during 2024 summarized, and those were just a little bit of what I could capture of what happened, what kind of transactions happened in 2024. So let's move forward. These were the journal entries from those transactions that happened in 2024, and we had a couple of transactions from money moving in, moving out, paying off salaries and wages to our employees, cash leaving, cash going in, cash going out, equipment coming in, coming out, buying stock, and much, much more. Here showing from here, just basically showing the T accounts that I have, just basically updating them, keeping them up to place. However, this is adjusting the the adjusting trial balance T accounts. From here is the creating the unadjusted trial balance. List, which we create by listing all account titles and their balances from the ledger. Place debit balances in the debit column and credit balances in the credit column, which debit is left and credit is right, and confirm that both columns are equal. If here we can confirm both columns are equal with the totals, which is 107, that means that this problem would be correct. As it shows, if both of these were different numbers in the bottom, that would lead to us knowing both of the we messed up somewhere in the unadjusted trial balance, which means it was wrong. But here showing we did it correctly. Like I said, we put the debit on the left and credit on the right. This is our adjusting journal entries right here. So we take a look there. We take each adjusting entry and post it onto its corresponding. We review the accounts that require adjustments, such as accurate expenses, prepaid items, or depreciation, as shown in that chart. Record the adjustments in the general journal and proper debit and credit entries. Here showing how we did that. Each expense having its own payable besides depreciation, but every other, like salaries, wages, expense is payable, income tax expense has its own payable. Moving forward, this is our adjusted trial balance, and we do that by, after posting the adjustments, we list all updated accounts balances, separate them into debit, which is left, and credit, which is right, and verify that the totals match. Here we can verify that the totals match, which means we got this question correct, and we can move on forward with this. After we received all that information, we could get our income statement here, which our income statement takes part of revenues and expenses. Here only having our service revenue at 57, our expenses complying of supplies expense, depreciation expense, salaries, wages expense, amortization expense, interest expense, income tax expense. Adding all of those up adds to $52 worth of total expenses. And if we use our formula to get our total and net income, which is revenues minus expenses equals net income, we would subtract 57 away from 52 to get 5, which would be our net income. Moving forward, this is how we get our retained earnings. In order for us to prepare this, we start with the beginning retained earnings that we received in the beginning, add the net income, which was 5, that being total 8, subtract dividends, which in this case is 0, and the result is the ending retained earning balance, which would be 8. Here is the example of our balance sheet, and the way we prepared for this, we listed all the assets, all our liabilities, and all our stockholders' equity accounts from the adjusted trial balance, and we confirm that the total assets equal total liabilities plus equity. And here we have right here 62 and 62, which means this is correct. From here on, we move on to the closing entry, and the way we prepared for this was we closed the temporary accounts by transferring revenues and expenses to the net income summary account, then transfer the balance to the retained earnings. This is the T accounts from the beginning, which is flip-flopped. I'm sorry about that, Miss Rodriguez. But here is the example of my T account. Which basically we're just plugging in what we got from our this was our adjusted trial balance. We're just plugging it in. If it was debited, we put it on the left. If it was credited, we put it on the right. And here we get our final product, which is the post-closing trial balance. And the way we prepare for this is list only permanent accounts from assets, liabilities, and stockholders' equity to verify that the debit and credit totals are equal after closing entries and are posted. And here we know we're correct because, like I've been stating most of this video, in the bottom 72 and 72 mean they're both correct. I want to thank my classmates that helped me get to this point, my teacher, and this was me going over my account cycle project. Thank you so much.